want to see how the sentiment shifts in their chat window if they make it available. Or I want to hear how they themselves, the presenters, think. If they start talking very dogmatic about how they know it's going to go up there, it's just going to have to do this. And if I see a setup, I know I got a 99% likelihood I'm going to make money there. And that sounds arrogant. That sounds condescending. It sounds ignorant to say something like that to some of you, but it's the honest truth. I'm not watching other YouTubers to learn anything. I want to see what a retail trader's mindset is about the market at the very time I'm anticipating my algorithm to spool a specific direction. And that's it. Some of them are entertaining to watch. But if you're part of a community like that, or a Discord or Telegram or whatever it is that you're a part of, and you don't know how to trade, you don't have a model, you don't know what you're doing, the absolute worst thing you could ever do to stifle your proper development is to be part of a group of people that are going to inspire you to do things many times after the fact. Everybody in the room will come to the consensus that, oh yeah, this market's going up after it starts running. I'm not saying there won't be rock stars amongst the community that generally get it right here and there. But what you're actually doing is you're conditioning yourself and building the wrong kind of experience. You're looking for a hand-holding experience versus how I'm teaching you. You're going to walk alone. And it sounds scary in the beginning. It sounds intimidating. And that's why I share when we do Twitter commentary, or I'll share my analysis beforehand on market reviews. I'll say, I think it's going to go here. I'm lending you my experience in the best way I can, because that way you can submit to that idea, go into the charts and study with that idea in mind, not listening to a bunch of chatter from people that may not even know how to trade, or they themselves are reacting to price and feeling impulsive. You don't know these people. You don't know what they've done. You don't know if they're really taking a trade. You don't know if they've been taking 15 trades before they even open their mouth up in these communities and they're in severe drawdown. And they just want to feel right inside by calling it publicly, but never divulging that they just went into serious drawdown or blown their account or their funded account or failed their combine. So the experience that you're trying to gain should be the proper kind of experience. That means sitting down, learning about the market themselves, whatever pursuit you're going to go after. It doesn't have to be mine. It doesn't have to be what I teach. You can apply what I'm saying today to whatever approach to trading you want to do. Because if you use these rules today I'm sharing, you stand a far better chance of being profitable with whatever I teach or what everyone else is teaching, and you have sound money management. You stand the best chance of finding consistency and profitability if you think like I'm going to show you today. So don't think I'm trying to contort your mind and brainwash you to only be a viewer of ICT concepts only and nothing else can work. That's not the message here today. Every other message has been that. I'm not going to shy away from that. But today, I kind of want to be a broad spectrum of insight, opinion. And it may not hit some of you like I'm aiming. And that's okay. But somebody came here and needed to hear it today, so that's what I'm doing. But your lack of experience in how you are going to relate to the actions in price, that is the root or foundation of your impatience. You just don't know what you're going to do. What am I going to do if this happens? Oh, well, let me rush through this part because it's uncomfortable not knowing myself, not knowing how I'm going to react. That's one of the reasons why I never drank alcohol and why I never did drugs. I've watched my family do things recklessly and tear their lives up, and my father went to prison because he gave himself over to substance abuse, which lowered his inhibitions. And then when you have a mental disorder that like he has, you're more prone to want to end somebody's life. That's what he did. And he's serving time for that. He went up for parole recently. I'm not sure how that went. I don't communicate with him, but it'll be interesting to see how that pans out, by the way. But the next thing is impulsiveness. If you're an impulsive person, what you're doing is you're showing signs that you have a lack of knowledge of price. So the normal progression is, while a trader starts this journey, the thing they overlook first and foremost is they themselves. Once they get a better grip on who they are as a trader, and they feel like they can conquer themselves in the personal sense, that doesn't mean that they have conquered the uncertainty about what price does generally. What separates me and our community from most others is when we talk about price, when I'm referring to price, I speak from a position of authority, authorship. This is what my algorithm's going to do. This is what it's been coded to do. This is what it's going to deliver. Just watch. Versus, we got to wait for our indicator to show us something. We got all of our eyes on this indicator here. These indicators, when these things do this, price will do that. That's total bullshit. That's bullshit. Price has no respect of any of that stuff. It just happens to be there, but it has no reason, no rhyme behind why price is doing that. Serious. I mean, it's just the way it is. I know it feels like it. It feels like it's got some kind of sorcery hold over top of price, and it's going to make it do something, walk it on a leash. It has absolutely nothing to do with it. VWAP is a fucking joke, myth. It ain't real. It's just in there just like any other thing. A stochastic divergence. You can find thousands of times where a stochastic divergence didn't do shit for price. It just kept on going. Impulsiveness stems from the lack of knowledge of price. You have to understand the central tenets of price delivery. That takes a lot of time. You can't rush that. It's not like you can go out there and buy technical analysis from A to Z book and think you figured it all out. I owned that book, by the way. I thought I was going to figure it all out when I was 20 years old. I didn't buy that book there. And oh, wow, this is a small little snapshot of this is an indicator. This is what it's used for most. Okay, well, now I know how to use it. I didn't know what I was doing. And what I was placing my interest and focus and time studying was things that was manipulating price. Think about that. That's what these indicators are doing. They're taking data that has already been delivered in price action, and they're applying mathematics and equations and compressing and contorting and torturing that data to spit out some kind of, here, look at this. Instead of, where's price going? How is it delivering right now? Was there any manipulation recently? Was there any stops rated while you're expecting it to go higher? Did it trade down into an inefficiency while you were expecting it to trade higher at a time of day when you expect it to run? There's a difference between what it is I'm trying to teach you to focus on versus everybody else's stuff. I'm not trying to take your attention away from price. I'm taking your attention right to price, but specifically at the right time. My algorithm delivers on time and price. It will not do anything but, unless manual intervention steps in. That means the powers that be say it wants to go here, it will go there, and it will do it in short order, and it will not respect your stop loss. It will not allow you to get out at the stop loss price. That's a trade that you were in. If you've ever endured that, you experience manual intervention, because the algorithm will not spool like that. It's not delivering price algorithmically when it does that. That's manual intervention. That's risk. That's the thing that everybody has to understand about. Every Every instance, every single trading session, every single trading day, every instrument that's tradable is open to that risk. Excluding that, and you never know when it's going to be there entirely. Generally, there's times, around the economic calendar, you can anticipate that. I've taught that. We've talked about it before. I'm sure there's going to be people that's going to mention, okay, well, we'll talk about it now because I didn't see that video. No, watch the video. There's no shortcuts here. You're an asshole, ICT. That's okay. That's your opinion. I'm a prick. I'm not an asshole. The lack of knowledge about price and its delivery, you put that to bed when you study conceptual ideas. Things like my core content mentorship playlists, month 1 through 12. Things like the Market Maker Primer playlist, the 2022 mentorship playlist, the Silver Bullet, the TGIF. You're bringing yourself closer to the general idea of what price can do in certain instances. What you should do with that information is determine how you feel drawn to certain aspects of what it is that the market does. Are you a type of trader that likes to go against everybody else and go against the market? Don't fight that. You're contrarian. That's all that means, that you're a contrarian. That means that you have to wait for instances where the market's literally just careening higher or lower, and you're comfortable fading that. And you can make lots of money doing that if you know what you're doing and you're waiting for a specific thing to occur in price. Now, admittedly, that's one of the hardest things in trading. So as a contrarian, you're wired way different than most people. But I have a way of teaching that you can take that contrarian mindset and apply it to any time frame with a very specific model. 2022, the fair value gap, silver bullet idea, they're all contrarian. No, they're not. They're trend following. No, they're not. They're whatever you want to encapsulate at that moment in time. If you cut enough of the candles off to the left, because we don't have to look left to see what price did all the time. We just need to know what time is it. Where's the draw on liquidity? Remember those times that I would share on Twitter? What do you see? And it'd be a small little section of price action. And invariably, somebody would come forward. There's not enough data here. This is ridiculous. Really? Encapsulate the entire hour of 10 o'clock and 11 o'clock in the morning, New York local time. I was doing things just like that. Smart guy. All that stuff is there for you to narrow your focus into what you're going to be drawn to as a trader. Are you a reversal trader? Contrarian? You fight against the trend? Okay, that's inherently ingrained in your personality. I can't fix that, and you're not going to undo it either. So you might as well find a way to apply that to price action, because price action is not going to bend its will to you. It's not going to say, you know what? Andy just started trading, and this guy's really strong-willed. I'm going to bend to his will. You know, who am I as price? The markets themselves. How am I going to, continue doing what I'm doing and not give it to Andy? That's not how it works. But it's weird how some of us come into the marketplace, neophytes, brand new, and we think that, you know what, I'm going to whip this shit's ass. It's going to be easy. It's going to bend to my will. I'm going to conquer it. I'm going to master the market. Let me tell you something. I wrote this shit, and I'm not the master of it, because anybody that's in a seat of authority higher than me can go in there and push a button, slide a little thing over here, and says the price is going to run higher than you thought it was going to go in the opposite direction. That's manual intervention. That is not me moving my stop too close, too fast, too soon, and getting stopped out. That's an error on my part. That's an error on your part as a trader. I'm talking about where you're in a trade and all of a sudden it's going 50, 75, 100 plus handles, just like that. That's not an error in trading. That's you getting ran over by a Mack truck and a convoy's behind it. And it just keeps and over and over and over again. you're getting ran over. That's the risk in these markets. Every single time you get in the marketplace, that is there. And I've been telling all of you, we are going to see some wild ass shit in currencies. And I am not opening myself up to that risk. That's the reason why I'm not trading Forex. I didn't forget how to trade Forex. I don't think that what I'm saying here is saying that Forex is not favorable or can't be profitable, because I have students and you see other people in other school of thought that they're making money trading Forex. I'm not personally accepting that level of risk because it's going to be violent. When the Swissy and the Euro were depegged, we're talking about that. You can't survive that. I can't survive that. Brokerage firms didn't survive that. It's, that's an extinction level event in trading. But you have to understand that that's always there. That risk is always there. And stop loss orders will not protect you from that. Putting that aside, you have to know what the normal delivery of price is. When does the market usually have a spooling event? That means where it starts to run in one direction. It doesn't need to be fast. It doesn't always have to be a low resistance liquidity run where it's here 1 minute and then a couple minutes later it's already up 50 handles. It just means it starts to go into a specific buy or sell program. That's not a buy and sell model. A buy program is when price or institutional order flow just starts delivering higher prices. It doesn't matter how many people are buying it. It has absolutely no fucking reason why price is going up. Doesn't matter how many contracts or buyers or sellers are coming in. It's being offered continuously. That's a buy program. It's going to just keep offering at a higher price. Keep hiring higher. And it just keeps doing that. When markets move up, they're in a buy program. It has absolutely no cause and effect associated with the amount of volume of buying and selling. That is the biggest fucking myth this industry pulls over everybody. And the people that work in the financial industry, they buy that shit, they spoon feed it, and they say, oh, yep, that's what it is. And they get on CNBC to talk that bullshit. They get in these podcasts, they get on their YouTube videos, they write fucking books, and it's all fucking fiction. These markets are controlled. Before there were digital markets where everything is automated now, men would sit here and just run the market just like this. That's the way it was. That was the market makers, not a dealer at a desk who say, I'm a market maker. You're a fucking dealer. You can't control price. You facilitate a buyer and seller together. Yeah, that's right. That's wonderful. But you aren't controlling where price is going. That's a market maker. That's what a central bank does. They run everything. You can't stop it. You're not going to fucking change it. You ain't going to master it. I can fall victim to it. Whenever they want to go in there and change the shit up right then and there, that's manual intervention. But they're not going to do that every single day, every session, every week. Because nobody would trade then. They only want to go in there once in a while and clean the table. That's what happens. That's the way it works. That's the real market. That's how these things operate. And for some of you, maybe you've been trading for a while, maybe you've been profitable, and you hear that kind of stuff, and you're like, this guy's full of shit. Okay, bring your shit here live, and I'll do my shit live, and I'll run circles around your fucking ass and be more precise than you've ever fucking seen. I'll be a surgical precision artist, and I will make your shit look like fucking clownery. It's simple. Don't talk from the sidelines. But you have to learn what these markets do through price delivery. And if you do that, you remove impulsiveness. What is impulsiveness? You're watching price. You're among some chattering community of people on a Telegram or a Discord or whatnot. And you're simply waiting for something to happen in price, and it starts running higher. What's everybody going to do? Oh, I'm buying. Oh, it's going up. Everybody will find their voice then and say, It's going higher. Of course it is. It's gone up 30 handles. It's running. And then you feel like, I got to get on. I got to get on that. And what do? Buy it. Buy it. I got to buy it right now. Because it might keep going up to where? I don't fucking know, but it's going to go up because look what it's doing right now. That's impulsiveness. And some of you are fucking laughing right now and smiling, thinking, shaking your head. This motherfucker just pegged me again. Yes, we've all been there. I've been there. But the only way you combat that and you keep it at bay and you conquer it is to learn about price delivery. That means you're not even back testing. You're just studying what price is likely to do most times. In certain instances, in certain circumstances, the market will create market reversals. It'll create continuations. It'll create range-bound opportunities. Admittedly, I can't stand trading inside of a narrow range. I can, but to me, it's too tedious. It pisses me off. I'll have more losing trades than I like to have. And I can come out of that, but I just don't like that. It's a waste of my fucking time doing that. I know I can sit on my hands and wait for the time when I know the market's going to run, or offer me swings intraday, where I can operate and do well. Get in, take mine, and go home. And leave it to the rest of the people to try to figure out what they're doing with it. But your impulsiveness is conquered by the study of general price action and understanding what's available in terms of how markets move. What's the benefit of that? Knowing what to do for yourself as a trader in terms of pursuing certain aspects of trading. Some of you can't do well in a trending market. Like it completely does you in. Like you would love to be in a range-bound environment. You like that kind of thing. Okay, that's a strength for you when you identify that. Then you can go in and zone in to that type of condition in the marketplace. Every time frame, every single day has that occurring. You're going to find that somewhere in every trading day, on any one given market, you go down low enough in a time frame, you'll see that very characteristic in price. And you can use that to trade. That's what I mean by understanding and having a general knowledge of how price is delivered. It moves from consolidations to expansions to reversals. Knowing that ebb and flow, how it does it, and then applying it from a higher time frame, monthly, weekly, daily, 4 hour, 1 hour, 15, or whatever time frame you want to use. You navigate with that price delivery continuum from higher time frame to lower time frame. And even if a move has already started on the daily chart and it's ran several hundred handles or whatever on a big day, you know that you're not going to be impulsive the next morning. I got to go in there and chase that. It's going to keep going down, which is the first rule I told you. On a large range day, what do? Lower our expectations on the morning session. That doesn't mean that the market can't run. It doesn't mean that you can't take a trade. It just means that you, as a developing student, you as a new trader in the making, you're not there yet. Don't have a hard opinion immediately the next morning after a large range day. Wait, that's amateur hour. Everybody is going to be thinking the same thing. It should keep going lower, and they're going to be waiting for that. But what happens if it doesn't? Perfect. Starts trading up into the previous day's range if it went down. And as long as it doesn't go crossed half of that previous day's range, the highest probability short is going to exist in the lower half of the previous day's range. And if it can't get 1/4 into it from its low, and it starts giving you a breakdown in market structure on lower time frames, you have all of the hand that needs to be shown to you at the poker table that this is what the market's about to do. Then it will go lower. But retail will see that running up and think, oh, it's going up, it's going up, it's going to go up, it's going to fill in that liquidity void. Bullshit. It's going into pricing a short-term premium. Then you wait for a shift in market structure, which is not a break in structure, it's a shift in market market structure. So many people calling things a break in market structure. No. A shift in market structure. When there's an established bias or an order flow or a sell program that's entered into the marketplace and it's been going lower. When it moves against that, all you're doing is building a short-term premium. And then you're going to wait for the market to shift back into a sell program. It's not a break in market structure. A shift in market structure is a continuation of the existing narrative and or buy or sell program. That's it. That's the definition. I want an ICT dictionary. Take fucking notes because I'm talking about it all the time. But if you're just listening to it and eating fucking Cheetos, it's not going to work for you. Okay, it's just something to listen to. You're not going to be able to use it. The next tenet is fear. Fear is the lack of journaled case studies. You're fearful that this isn't going to work. It's not going to work for you. It's worked for everybody else. ICT can do it. But I know as soon as I get out there and I try to do it, these assholes are going to change the algorithm. I'm going to waste my time. I'm afraid it's not going to work for me. I have so many profitable students that had that same fear. How do you get over it? By backtesting and journaling case studies of what you are expected to do when you're trading live, what you're trying to see in price action. And that way you see how many times it works. How many times did it fail? How many times did it go into a certain measure of drawdown? How many handles did it go against you before it started moving in your favor? How long did it take from your trade entry using the worst case entry point, not the best, and then when it got to your objective, whatever some liquidity would be or inefficiency it would be trading to. Your target is always going to be the opposing inefficiency. That means a fair value gap below. If you're short, you're looking for an inefficiency to target, or you're looking for a low or relative equal lows. So you're looking for sell side or a buy side imbalance, sell side inefficiency. That's your two targets when you're shorting. How fucking hard is that? That's not complicated. Stop listening to these fucking asshats out there saying that I'm overcomplicating. They're out there waiting for a fucking random time when an indicator's supposed to say something. I know exactly what the fuck I'm doing by the fucking minute. Every single fucking trading day, I know what minute I'm going to fucking trade. I know what time my fucking targets are going to get hit. Don't fucking believe me? Bring your shit. Let's go. Bring all your fucking indicator horse shit, and I will compare and contrast and roll your ass like a fucking spliff and smoke your ass in front of everybody. Stop leaving comments in these fucking people's channels about me. Come right here, motherfuckers. Fear is easily conquered. Easily conquered. Once you go through the process of collecting the resources and case studies, where it worked in the past. And what you're doing is you're training your brain to see these examples. By retention, doing it over and over and over again, you're giving yourself pseudo experience. That means that you're seeing something that's already happened, but you're putting annotations to it in a journal, and you're really placing a lot of significance on that, as if you were there. And because you're making it meaningful to you, it's like writing a love letter to your future self. This is what you did so well, and I'm proud of you being able to see this as it happened. Sounds silly, sounds weird, right? But that's how you have to treat it. You're going to nurture yourself and encourage yourself and be the biggest cheerleader for yourself and leave no opportunity for anybody to come in and fuck it up. You don't want anybody else's opinion. You don't want my opinion. As much as you think you do, you don't want my opinion. Your subconscious doesn't want to hear from inner circle trader. He doesn't want to fucking hear. She doesn't want to hear. You don't want to hear anything from anyone. This is your fortress of solitude. No one can hurt you here. Your journal is your fucking secret weapon. It's the greatest fucking trading book you're ever going to read, and you're writing it yourself. You can't make it more intimate than that. It's your experiences, your study time, your focus, where you can be honest with yourself and not be embarrassed about, you maybe expected something else that day. And you can say it sweetly in annotations without being negative, because your subconscious is going to retain that. Your subconscious doesn't remember things vaguely. It doesn't do that. It records things that are heightened, whether it be euphoric or fearful, extremely pleasant or painful, inspirational, desperation. There's no middle ground in your subconscious. Everything is reactive by black and white, good and bad. It's just the way it is. So you have to take that into account when you're training your brain. And this is a very integral part to learning how to do this. You have to condition yourself. That's why you can't do it in a very short span of time. Your brain is extremely complex. It's extremely powerful. And if you feed it the wrong things, it will scare the living shit out of you, and you'll never learn how to do this. Stop forcing it. Stop rushing it. It has to be meditative. It has to be something you do as a daily ritual, even on weekends. You have to feed your mind constructive, positive learning case studies where you see these things happening in the past. You're fearful that it's not going to work for you because you don't know what the fuck you're doing. That's all. That's all it is.